VAT. So start with the input and output VAT. Is everything okay? Are you able to see what I'm writing on the board? Are you able to see what I'm writing on the board? So I start with the output VAT. So start with what we call output VAT. Understand that this is VAT. We call it VAT on sales. So whenever we talk about output VAT, this is basically VAT on sales. So that is to say that is VAT a seller charges when he sells goods and services. A VAT that a seller charges when he sells goods and services. Then you have the next one, that is what we call the input VAT. So when you talk about input VAT, this is basically VAT on what we call it purchases and expenses. VAT on purchases and what we call expenses. That is VAT on purchases and expenses. Together, team. VAT on purchases and what we call expenses altogether. So this is basically VAT paid by the seller when he's purchasing or paying for expenses. Are we together? So this VAT, this is normally deducted. And you call it from the output VAT. From the output VAT. So this is normally deducted from the output VAT as we determine what we call the output VAT. So then we proceed to what we call value of goods and services for VAT purpose. Value of what we call of goods and services. And you say for VAT purposes. So value of goods and services for VAT purposes. What we call the value of goods and services for VAT purposes together. So when you talk about value of goods and services for VAT purpose, we basically have two values. We have inclusive, what we call inclusive of what I call VAT. So number one, call it inclusive of VAT. Are we together? So when determining VAT, you have two concepts. It can be inclusive of VAT or it can be exclusive of VAT. So when you say inclusive of VAT, it basically means the value given already has VAT. The value given already say has VAT. The value that is given already has what called VAT. In which case, to say in which case VAT will be determined as follows. So if a figure has VAT, what is the total value? When you say inclusive of VAT, what is the total value? If a figure has VAT, what should be the total value? That should be 116%. So for us to determine VAT in that particular scenario, we'll say VAT is equals to, value inclusive of what we call VAT times 16 over 116. Times 16 over 116. So the value inclusive of VAT times 16 over 116. Times 16 over 116. Respond with a yes. Respond with a yes if you're together. Thank you so much. So the second is, we call it exclusive. Exclusive of what we call of VAT. So the second, we call it exclusive of VAT. Call it exclusive of VAT. So whenever we say exclusive of VAT, It means the value given does not have VAT. Value given, we say it does not have what you call have VAT. So it basically means that the value that is given does not have VAT. In which case, we say VAT is determined, and say as follows. In which case, we determine the VAT as follows. So when you say the value is exclusive of VAT, Evans, Natalie, what is that value? If the value is exclusive of VAT, what is the figure of that value? That means it's 100% together. So how do I get VAT? I'll simply say VAT is equals to value exclusive of VAT times 16 over 100. Value exclusive of VAT times 16 over 100. Value exclusive of VAT times 16 over 100. Respond with a yes. So these two things are very important. In relation to calculation of VAT, they're very important. I hope you can see the board clearly. Tafadhali bonyeza yes if we are together. So then I want to talk about what we call non-deductible. Non-deductible input VAT. Non-deductible input VAT. The next, talk about non-deductible input VAT. So when you talk about input VAT, number one, it is VAT on purchases and expenses. But when you say non-deductible input VAT, so we say this is VAT paid by a seller or a trader when purchasing goods and services or paying for expenses, but cannot be deducted against output VAT. So these are VAT that you basically, when you're buying, when you're purchasing for goods or paying for expenses, but you're saying in relation to taxes, you cannot deduct them against what you call the output VAT, which is VAT on sales. Are we together? So we say VAT paid by the seller, VAT paid, and say by the seller, paid by the seller. We say VAT paid by the seller or trader when purchasing goods, paid by the seller. We say when purchasing goods or paying for expenses, but cannot be deducted. We say against output VAT. Together. So I want you, when you go to exam, you remember those are deductible. So you incur them when you're basically purchasing goods or paying for expenses, but you cannot deduct them when against output VAT. Example of non-deductible. We say VAT on include. Example. One is VAT on what's called entertainment. VAT on what's called on entertainment services. VAT on entertainment services. VAT on restaurant services. VAT on restaurant services. Then we have VAT on accommodation services. We have VAT on what's called on accommodation services. And then we can have, let me say, VAT on catering services. VAT on what's called on catering services. So when you see these items, that are a seller basically spent on catering services should not be included. That is a non-deductible input fee, VAT. Together, respond with a yes. Tuko pamoja. I hope you can see the board. Brian, Anna, Alan, Emma, Jojo, I hope you're together. Perfect. So we talk about determination of VAT payable or refundable. Determination of what we call of the VAT payable or what's called refundable. So the determination of VAT payable or refundable. So how do we get VAT? I simply know that VAT is going to be output VAT minus what's called the input VAT. So output VAT minus what's called the input VAT. Output VAT minus what's called the input minus the input VAT. Output VAT minus what's called the input VAT. So we have a number of scenarios. We have a number of scenarios. So the first scenario, we say that in case, the first scenario in case, we call it in case there is no what we call exempt cells. In case is not an exempt cells. Tafadhali nipatie yes. In case there's no exempt cells. And I hope you can see the board. So the first scenario, where we do not have exempt cells. Tuko pamoja. Give mwalimu yes. Perfect. So we basically, in that scenario, we use what we call a VAT formula. We use what we call a VAT formula. We basically use what we call VAT formula. We basically, in that scenario, we use what we call the VAT, we call it formula. We call it the VAT formula. In that scenario, we use what we call the VAT formula. So that is a VAT account. Basically, come up with VAT account. Allow me to come up with a VAT account. So on this VAT account, I have input and output. So I can have my, on this side, I'll call it input VAT. Then on this side, I will have it as output VAT. I will have on one end input VAT. Then I can basically have the other end as output VAT. So understand that when I talk about input VAT, this is VAT on purchases and expenses together. So look at the items that I'm having. Look at the items that I'm having. So when I start, so we have VAT. And one is VAT on credit. Call it on credit, not issued. VAT on credit, not issued. So don't worry, VAT on credit, not issued. Then we have VAT on return. I'm explaining on return inwards. VAT on return inwards. Then we have VAT on bad debts. VAT on bad debts. Then we have VAT on what's called on the purchases. VAT on the purchases. Then you have VAT on debit not received. VAT on debit not. And you call it received. VAT on the debit not received. VAT on the debit not received. Then we have VAT on expenses. We can call it VAT on expenses. Have it there, VAT on expenses. Then we can talk about, we now go to the output. So we have VAT, we have it VAT, and we call it on sales. VAT on sales. We have the VAT on sales. Then we have VAT on debit note issued. VAT on the debit note issued. We call it the VAT on the debit note issued. VAT on the debit note issued. Then you have VAT on credit note received. VAT on what's called on the credit note not received. VAT on the credit not received. We have VAT on return outwards. VAT on return outwards. So we have it. So are we there on that? So at this point, we now just have summary. We can have the summary. We have the summaries at that point. So that is the balancing figure. That is the summary. We have the summary. So the first scenario, look up. If this side, Abdul Nasir, if this side, that is the output VAT, is if the output VAT is more than the input VAT, we have what's called the VAT. We have what's called the VAT payable. We have what's called the VAT payable as the balancing figure. So that is if the output VAT is more, we have VAT payable. The second scenario, if this input VAT is more than output, then we have on the other side VAT, we call it refundable. Refundable as the balancing figure. As the balancing figure. As what we call the balancing figure. Understood. And now I want to dissect on what I've given on the board. And now I want to dissect on what I have given on the board. Can I proceed? I now want to dissect on what we have on the board. So number one, I want to talk about credit note. Credit note. So understand that credit note is used to correct what we call correct an overcharge. An overcharge. Are we together? Credit note is used to correct an overcharge. So therefore, we understand therefore, we know that regime reduces. Then we have debit note used to correct an undercharge. An undercharge. Therefore, increases. We define standard therefore increases. Therefore increases. So debit note is used to correct an undercharge, and you say therefore increases. Give me a yes if you're together. So I want us now look up so I want to say debit note issued and credit note not issued. This was affects what's called the output. So then we have debit note received and what's called the credit note received affects input. This means purchases, and this means sales. So that means sales, and that means purchases. Together, team. So I'm basically saying that when I have a debit note issued, this should increase the sales. Is that understood? That should increase the sales. Tuko pamoja? That should increase the sales. But when I have a credit note, look up, when I have a credit note issued, this should reduce. Tuko pamoja, that should reduce. Instead of having it as a minus here, we put this side as a positive. Suppose we would have used the credit note issued, it would have been a minus. But I put it on the side of input. If I put it on the input, it becomes positive. That's okay, but you can use it here as a minus. Understood? Tafadhali bonyeza yes if we are together. Perfect. Then I say debit note received and credit note received affect what called purchases. You can see the debit note received is an increase. It's used to correct another charge. So we have it there. However, so for the credit note received, instead of having it here as a minus, I've had it here as a positive. So you can interchange them. That is when you do not have exempt. When you do not have exempt, you can interchange. Is that understood? Perfect. So I want to explain what is here. So debit note and credit note I've explained. So I proceed to this. I have returning notes. What is returning notes? Those are sales return. So instead of having sales return as a minus, I can have it here as a positive. Then you have VAT on bad debts. Bad debts should be reducing sales. But instead of having it as a negative, I have it here as a positive. VAT on purchases is okay, and VAT on expenses is okay. On this side, VAT on sales, that's okay. VAT on debit note issued, that's also okay, I've explained. VAT on credit note, I've said, that's also okay. Abdi says, Malimo, repeat debit and credit. Abdi, where are you? I hope you are with us. Abdi, I'll say debit note issued and credit note issued, those affect sales. Tuko pamoja Aji. And then when I say debit note received and credit note received, they affect what's called the purchases altogether. But look up, I say that credit note is used to correct an overcharge. So therefore, credit note should be reducing. Then the debit note is used to correct another charge. So therefore, increasing. Aji, tuko pamoja? Aji, your response is needed, Aji. Aji, your response is needed. So that is understood. Are you saying you have understood what Mwalimu is saying? So perfect. That is what we call the VAT account. Together, that is what we call the VAT account, and that is what you can. But we only use it when there is no exempt. When there is no exempt. Together, team. Meshach, Caroline, Awiko Dangote, Brian, I hope we are together. So then we say, in case of exempt sales, in case, we have the second scenario, in case, call it in case of what we call of exempt sales. In case of what we call the exempt sales. So under exempt sales, we basically have two scenarios. We have two scenarios. Are we together? Under exempt sales, we basically have two scenarios happening. Under exempt sales, we basically have two scenarios happening. So we have the first method. Under exempt sales, we call it the direct method. Are we together? We have it as the direct method. Mulipatia, yes. We have it as the direct method. So when we say direct method, we call it a method used when a trader deals with some of the sales which are exempted. A trader deals with some of the sales, some of what we call the sales that we say are exempted. Some of the sales that are exempted deals with some of the sales that are exempted from VAT, from what we call from VAT. And can, the word is and can, it deals with some of the sales that are exempted from VAT, and the word is can, and can distinguish items sold, and can distinguish items, it says sold as exempt can basically distinguish items sold as exempt when they were purchased. When they were purchased. When they were purchased. When they were purchased. When they were basically purchased. Are we together? So then we basically say that in this input VAT, in this, we say input VAT, in this scenario, input VAT of exempt sales, of the exempt sales, this should not be included. Input VAT on the exempt sales is not included. Are we together? We basically say that that is not included. So how do I get VAT? Allow me to wrap this aside so that I come to this aside. We're about to start example. I come to this aside. I come to this other side. I come to this other side. Allow me to come to this aside. So how do I get VAT payable or refunded? So in that case, I basically understand that VAT payable is to what we call refundable, will be equals to, I want you to be very keen, output VAT on sales, output VAT, call it on sales, minus, look up, minus input VAT of goods sold, input VAT on goods sold, we say at standard rate, sold at the standard rate, and zero rate. So the key thing, those goods that were purchased and sold as exempt, you don't include them. Because you can identify them, so you don't include them in that scenario. Together team, tafadhali nipatie yes. Hata mimi nifurahie. Asante. Emma, I also get happy when you understand. Jojo, I also get happy when you understand. When you don't understand, I get sad. So then you go to what's called proportionate method. I proceed to what's called proportionate. We call it proportionate method. The next, call it the proportionate method. So what we call the VAT restriction. I want you to understand the two things, the difference between those two things. We don't want it we call it proportionate method. So what we call the VAT restriction. We finish the question. Sawa. I want us to finish the question is when I give you a break. Simi sawa. Is that okay? That should be okay. I've always encouraged students. For more example, you can go to Mwalimu's YouTube channel. Follow that channel. Look at that channel. You'll get more examples. More examples under VAT. Yes. So if you're looking for more examples, go to that YouTube channel. Get those more assignments, more videos on VAT or any other topic that you need. So then, the first thing that we are being asked, output VAT. So we're being told to get what's called output VAT. So look at it. So say items to what we call supplies. Then we have what we call amount. So what we call the value. We have the VAT rate. Then you have the VAT. Tuko pamoja. So output, we have what we call local cells. We have what we call cells, local cells. We have the local cells. So local cells is a figure of, we are given as 59, 16 times 16. We are using, it's inclusive. What is that? Give me that. Give me that figure. You're the guys that I have. I don't have any other person apart from you. So kibarua ni kwenyu. So that is 816. 816. So the next is now the export cells. We have the export cells. So export cells ninga be the 600,000. So times 0. Lazima uandike 0 na 0. Please. Exempt is not included. There will be no marks for this. Exempt. This is not awarded, but however, put it there. You see, exam depends on our together. But remember, exempt is not included. So that's a dash. Together. You don't write anything, that's a dash. So because exam times, sometimes exams become technical. So when you write those things, when it becomes technical, you get marks. Then you have the bad debts. We have what's called the bad debts. And I will teach you, there's so many approach people take. All those approaches are correct. You will not be marked wrong. All those approaches are still correct. So the bad debts, the budget is a figure of 121,800. We have 16, and this one should be less. We're less that. Get for me that we're less that. So the budget will less that. The budget will less that. Get for me that for the budget. So for the budget, so that is 16,800. So then you get total output PT. Total output PAT. Total output VAT. So give me that. What is the figure? Somebody gets it 7. Give it again to me. 799,200. So umefanya kazi mzuri. You can clap for yourself. That's a very good work. How many marks was that? 3 marks. So 1, 2, 3. So it was how many marks? 2 marks? 3. So those are 3 marks. That's how we have to claim 3 marks. So this entry will give you 3 marks together. So next is what's called deductible input VAT. So we move to the second, that is B. We call it deductible input VAT. Before we get it, we get input VAT, the total input VAT. So you're going to say items to what we call supplies. We are going to get items to supplies. We have a figure that is amount to what we call value. Then you have the VAT rate. Then you have what's called the VAT. What we call the VAT. We have 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 what we call the VAT. So we proceed, and we are saying the first is purchase. Purchase. Purchases 4640. (16 over 116). Get for me that. Then you have computers. Computers. That's 162. 400 times 16 over 116. So this is 640. Nimeshukuru. The other one. The next is computers 162 times 16. Say it's 22,400. So then you have what you call the return outwards. So we have the return outwards. That should be 139,200 times 16 over 116. That should be minus of purchase. Get me that minus of the purchase. Minus of the purchase. Minus of the purchase. That's 19,200. So you're less. Because we're doing deductible, we're restricting items of purchase you separate. So then you have what we call the import. Next is what we call the import. So we have legal fee. Before import, there's legal fee. So legal fee was 640. 16 over 116. Get from that. That legal fee. What is the figure for that legal fee? 8640. But the next we have what we call import. So we had 360. But remember, imports are normally exclusive of VAT. So that's 16 over 100. 16 over 100. So get from the 16 over 100. Imports are normally exclusive of VAT. So you use 16 over 100. Get me that times 16 over 100 times the 16 over 100. So what do you have? 57,600. Then we have the next, we call it printing and stationery. We have printing and stationery. So for the printing and stationery, we have 27,840, 16 over 116. Get for that. Printing and stationery. 16 over 116. 840, what is the figure? 3840. So then we have value VAR the VAT. So then we have what we call electricity. We have it as 53,914. 16 over 116. Get me that. 16 over 116. So that should be 7440. 7440. So we don't have any item, so we get total input VAT. So get from the total input. Get me the total input VAT. Is it really? Yeah, that can make sense. But that one, 720, took us out 720, 720. So we have 720, 720. So then we get the deductible input VAT. We get what's called the deductible, and we call it input VAT. So that should be what's called taxable supplies over what we call the total supplies times what we call the total input VAT, times the total input VAT times the total input VAT times the total input VAT times the total input VAT. So I already have this. Look up. I already have the total input V. See, hapo tuko sawa. Total input VAT is there. Is it there? Total input VAT is there. Tafadhali nipatie yes. Is it there? So I want to get taxable supplies. Taxable supplies. So zero rated ngapi is 600. What about standard rates? Standard rate is this and this. But we say it should be exclusive of VAT. This is inclusive. So the standard rate, we had a figure of standard rate. We had a figure of 5916 less the budget, which is 121,800. What do you get? What do you get? So to get the standard rate, 5916 minus 121,800. So what do you have? Tell me, you're the guys that I have. I don't have any other person apart from you guys. Munipatie hiyo. Tafadhali naomba munipe hiyo. 5916 00 minus 121. So that should be 57,94,200. 57,94,200. 57,94,200. We call it 57,94,200. We call it 57,94,200. 200. So 54,94,200. This figure 57,94. Sorry, 57,94,200. This figure is inclusive of the VAT, implying that this figure is 116%. 116%. Tuko pamoja, implying that this figure is 116%. Implying that this figure is 116%. However, we say when you're restricting or getting deductible, the standard rate should be exclusive. So we get the figure 100% without the VAT. So I come here and say 100 over 116 times 57,94,200. So they get for me the figure exclusive of VAT. Get me the figure exclusive of VAT. Are we Odongo? Give me that. Give me that. Give me that. Are we come? So that should be 499500. 4,995,000. So together, I can come back here. I have this. So look up. So I can get the taxable supplies. So taxable supplies should be, we have 499,500 plus 600,000. So what should be the total of the total taxable supplies? What should be the taxable supplies? Taxable supplies, 4,995,000 plus 600,000. What is that? That is 55,595,000. 5,595,000. Then we get the total supplies. Look at now total supplies. Total supplies should now be standard rate plus 0 plus exempt. So this is we have. Standard is 4,995 plus 600. Exempt ni ngapi? Kwa swali exempt ni ngapi? Exempt ni ngapi? 1,840,000. So what is the total supplies? That's 1 million. Exempt is 1,840,000. So give me the total supplies. Add. So that should be 74,35,000. 74,35,000. 74,35,000. We have it as 74,35,000. So we can now get deductible input VAT. So that should be taxable supplies, which is 55,95,000 over total supply, which is 74,35,000, the times total input VAT, which is 720. So what is the deductible input VAT? Get for me the deductible input VAT. Here. Get for me the deductible input VAT. So that's 5, just round it to whole number. 542,358. 542,358. 542,358. So how do I get? Now VAT payable or refundable. VAT payable. So what you call refundable. That should be output VAT. It was 799. 799, what was it? Minus deductible. What was it? 799? What was it? 799? Tafadhali, 799? 200 minus the deductible, which is 542,358. So this is VAT payable. VAT payable. How much is it? Give me that. 256,847. That's okay. 256, 842. 256, 842. So look up. So 1, 2, 3, 4, 5, 6, 7, 7. We have 8. Yes, but Amy, this question, people did well. People did well. Then the formula will say output VAT, output VAT minus deductible input, then the answer for that, which most people do not get. This one is hard to get. So this part, every student, in fact, if you have done until this, you have the 5. You don't have to get until deductible. You didn't have to get until total, until the deductible. You know, you didn't have to get that. You only need to have that. That is how we get that. Is that sunk? Is that settled? Is that question settled in our brain now? Iko sawa. Is it okay? Perfect. We can have our break. We can have our break, or you don't need a break. Amuhitaji break, tuendelee. I'm looking for a smaller question. I don't want to. So we can have our break now. How many minutes break? How many minutes break? How many minutes break? When you're quiet, it means you're silent. I can proceed. Can I continue, or do you need a break? Wiko, as our representative, do it? Okay, so about 10 minutes and you come back. The last sitting, or if a question like this, can we do one more like for the restriction, or we pick August question, August 2025 question? We can do one more like this, then we pick the August. That is in the next class. It was not restriction. We can pick the August, the last sitting VAT. We pick one on restriction. Is that okay? Can Malimo pick one on restriction? One more on this. Perfect. But I'm looking for a smaller one, much smaller. So that should be August 2023. Sorry, August 2023. Pick August 2023. August 2023, not 24. So within those times, we should be attentive and finish this. Within the time, I don't want us to extend, I just want us to do it within the time. Within the time that is allocated. It means that you participate. For us to finish it within time, you participate. Question 2C. If you're there, we respond with a yes. Respond with a yes, come at Baraka traders, we are called Baraka traders, provided, I hope you're recording, provided you with the following details in respect of transaction for the month of December 2022. So purchases, what are purchases? Are they input or output? Purchases, those are input. The next is what we call return outwards. Return outwards. Those are purchase return that affects the input, a reduction in the input. Then we have catering expenses. Catering expense, we said non-deductible input VAT, non-deductible input. We're saying non-deductible input VAT. Then you have repair of delivery van. Repair of delivery van. Repair of delivery van. No, repair of delivery van, that should be input. That's an expense. Then we have what's called audit fee. audit fee, that's input. Then you have cost insurance, that's input altogether. That should be an input altogether. Then sales local, that's 1,131,000, that's output. Sales export, which is rated, that's output. Exempt, that's also sales, but you don't charge VAT. Photocopying, what is photocopying? Photocopying is input. Then lastly, we have telephone bill. Telephone bill is input. So we've been told that input related to goods sold as exempts could not directly be identified as it was appropriate to restrict. So this is a question on restriction. So in the examiner tells us that all transactions are inclusive of value added tax at the rate of 16%. What are we using? 16 over 116. So then we're being told that transactions, import duty was 20% on cost and CFI. So you're getting a CFI plus cost. That should also be 120 over 100 times import fee. Import should be 155. So what do you have? What should we have for that? So that should be 150. That should be 150. That should be 150. So we thought that the data valued at 50,000 was declared bankrupt. That is bad debt, a reduction in sales. So compute output. So we have output, we start with the output. This should also move fast. It's more or less the same question. Item, supplies, value, VAT rate, and the VAT. So we have local sale, (16 over 116). Get me that. So get me that kindly. So that is 156. Export. Export was 250. That should be 0. There's no mark for this, but I will just put it exempt. Sales. Then we have what's called the bad debts. So we have the bad debts. Bad debt was 50. 16 over 116. So what is that? Get me that. Okay. So we have what's called the total output VAT. It should be 149. 149. So tumemaliza. So that should be 1, 2, 3. Any two should give you 2 marks. So deductible input VAT. Deductible input VAT. So let's start with the VAT input total item. And value. We have the VAT. So the first item is purchases. (16 over 116). Get me that. 16 over 116. Ngapi hiyo? 100K. So the return outputs was 58. So what is the return outputs? The figure? Give me the figure. Catering is non-deductible. We don't repair. One. Get me that. Repair of delivery one. Then we have what we call audit. Audit fee. Audit fee ni ngapi? 3,600. So we come here. So then we have the import. 150, but remember this is 16 over 100. It's normally exclusive of VAT. So get for me that. 16 over 100, get for me that. It's normally, get me that. $24. So then we have photocopying. So 600 times 16 over 116. Get for me that. Then we have telephone. Bill. So get for me those two. Telephone bill, get for me photocopy. Gapi? VAT on that. Provide me tafadhali. So 1,600. What about telephone? Photocopying is 16. Telephone ni ngapi? So this says 32. then get for me total input VAT. Very fast, get that. 128,400. So we get the deductible, we get the taxable supplies. We make the sales at standard rate to be exclusive. So 1310 minus 50,750. What are you getting for that? 1,000,001. That's 1,131 minus 50. 5750. That's 1 million. Is it that? Is it? So 1,080,250. 1,080,250. So this figure, 1,080,250, is inclusive. That is 116. What is the figure exclusive? That's 100. So 100 is going to be 100 over 116. That's 1080 to 50. So what should that be? Nine that one to 50. 931 to 50. So I want us to get the taxable supplies. Taxable plus zero rated was how much? To 50. So what is the taxable supplies? Taxable supply in ngapi? 931 to 50 plus 250. That is 181 to 50. Total supply. So you had 1181 to 50, you add it plus exempt, which was 350. If you add it to 350, total supplies in ngapi? Give me the total supplies. 1531 to 50. So you can get the deductible. We can get the deductible, which is taxable supplies, which is 1181 to 50 over total supplies, which is 1531 to 50 times 128,400. That is 99,051. Thank you so much. So VAT payable, to what we call refundable, should be output minus deductible. Input VAT. What is our total input VAT? Total our output VAT was 114. What was the output that we need to less from 99? Give me the output. See, I wrapped it there. 149. So this is VAT payable. So what is the VAT payable? That should be 9. The last one should be 9. Alan, 8 nimekata. The last one should be 9. 949. Not wewe. We thank God. Nimeshukuru. Have you understood? Yes, if it's point, just round it to whole number. 0.5, round it to the next. So there's a question there. Advise the management on applicable for late fee. Look at that handout. Have I given offenses and penalty on that handout? We'll discuss it, but you can see offenses and penalty. Are they there? Yes, we have offenses and penalty. We can close it there. God bless you, and God bless our class. We stop it at that for today. God bless you, and God bless our class. Unless somebody has something that is burning. Asante. God bless your week. Thank you, Emma.